All right, so we are live on our channel, but also on Farzad's channel. So if you're new to seeing us on Farzad's channel, Farzad has us on, allows us to simul stream every Tuesday at 4 p.m. Uh, Initially, on this video, we're going to cover some controversial new research that we shared yesterday on our channel, publishing that around 4 p.m. On Monday around how Elon, for tax reasons, may be selling his stock again.
We
Um,
stirred the pot a little bit, didn't we?
we did stir the pot. So it's definitely very controversial. People don't want to hear about negative things around Tesla for sure. Um, so we got a lot of pushback on it, but nothing really that shook our thesis around the idea. So we're going to get right into that and um, and talk about that and explain what it is. So Elon has the opportunity with his 2025 CEO Performance Award to, in a way, like prepay some taxes and pay ordinary income rate on them now. There's this election that he could do called the 83B. And what this allows him to do is wherever the stock is now, then that difference between now and when the stock is, let's say, he's successful with the plan and the stock's like $2,200 or whatever a share, that'll be taxed at long-term capital gains rates. And then in the future, Elon would be forced to sell less stock to pay his taxes. And this is a tax election that some companies have done that allowed their executives to do. So Matt, maybe you could share this from the Tesla proxy materials. I think people think we're just like making this up.
Yeah, I did see in some of the comments on the video, there's like, you guys provided no evidence. This is just pure speculation. And actually, the only reason we're even aware of this is because it's in Tesla's actual proxy statement, which we as shareholders voted on. So yeah, I'm going to go ahead and share my screen just to kind of show some of the
and
key.
I think like some people are wondering, like, why are we finding out about this now? Why didn't we find out about it early? It was always there in the proxy when we voted, but actually thinking through what the implications of this are is what has got us thinking this could happen. So this is why now.
Yeah. So I'm going to go ahead and share my screen now just so people can see exactly the source of what we're talking about. So here, what we're looking at, and I'll try to zoom in a little bit because I'm guessing that's a little on the small side. So what we're looking at right now is the proxy statement that Tesla filed before we actually voted. So this has been out there basically since September. And we're in the section on Elon's compensation right now. And explicitly, it says here that subject to compliance with Mr. Musk's tax withholding obligations, Mr. Musk may make an election under code section 83B with respect to all or portion of the shares subject to the 2025 CEO Performance Award. So one of the things that we thought was really important to highlight is the fact that the comp plan that was approved by shareholders explicitly allows Elon to make this section 83B election. So this is coming from like the source document itself. It's not just, Bradford and Matt saying, well, what if he makes this election? Somebody has thought through this and thought that it might be something that Elon wants to do and wanted to include it in the actual shareholder materials in the proxy statement. So this is like the furthest thing from speculation. While all we're doing is actually going to the source document itself and looking at what is explicitly allowed there. The other section that's very relevant right above that is the payment of taxes and tax withholdings. So I won't read this entire section, but it does also say here that notwithstanding the foregoing, any required minimum tax withholding will be paid to Tesla in cash if arising due to filing of a Section 83B election. So the reason we think that this could be very timely is that there's actually only 30 days from the time at which the shares were issued for Elon to make the election. If you go to the actual Form 4, which I haven't pulled up here, but you guys can all go and check it out. The Form 4 that was filed on, I think it was November 10th. It lists the date of issue for all 424 million shares that Elon was awarded as November 6th. So 30 days from that November 6th date when the shares were issued is December 6th. Now, some of you might be thinking, okay, well, Elon, he didn't actually earn all 424 million shares. So like, what are you talking about? Why would he be issued those? Technically, he was actually issued those, but they don't vest until each tranche hits the, kind of operational or market cap milestone as required, by the comp plan. So Elon is actually listed as the beneficial owner of those shares right now. They're restricted, meaning, he doesn't actually own them outright. But
he can vote on them, right?
He can vote on them. And if he does make this Section 83B election, then he has to pay ordinary income on the difference between the current price as of the date that Elon makes the 83B election and the price at which this performance award was first put forth, which was back in September, I think it was, and the price was $334 a share. Right. So Tesla's almost $100 per share higher than it was back then. So Elon would be paying $100 roughly in ordinary income tax on all 424 million shares. So by the math we shared in the video yesterday, that's about a $15 billion obligation. And as it said in that proxy statement, Elon would owe Tesla that cash immediately, because Tesla would have to have withholding tax paid to the government immediately upon Elon making that Section 83B election. So that is what the implications of this, as Bradford, you were saying before, are what prompted us to contemplate that Elon could actually be selling, about $15 billion worth of Tesla this week, potentially, in order to pay for that bill if he were to make that election.
So let's step back. So I think people are still a bit incredulous that Elon would be selling for tax reasons. This is an employee benefit. So when Elon gets, when things vest or get awarded, or when he exercises them, when different things happen, Elon has to pay tax because this is an employee benefit. It's not like Elon reached into his pocket, bought these shares with cash, and just can decide to hold the shares and not pay tax on them until he sells them. That's not an option for Elon.
The cash has to go to the government. Who pays it, how it's funded, there's a little bit of wiggle room there, but the cash has to get paid to the government.
So in 2022, Elon bought Twitter and he sold more shares. But what happened in 2021 is Elon, his 2012 CEO award was expiring, and he owed 11 billion or so in taxes. I broke that story on Dave Lee's channel. You can find that. So he owed 11 billion in tax, and he had to pay tax. And I broke this a month before Elon did that poll where he said, I'm going to be selling about 10% of my shares. Should I sell more? Yes or no? And he did this poll on Twitter, and then he replied to it and he said, I will abide by this poll. That's the first time he said that. So the reason why he had to do that is because it was an employee award. And when you exercise, and this is set up, the 2025 is set up differently, but with these non-qualified stock options, when you exercise them, you must pay the tax. So Elon's a cashless billionaire. When he owes tax, he has to sell something to get cash. So he could sell some shares in Tesla. He could sell shares in SpaceX or whatever, get the cash to do it. He could also borrow money, so he can do a margin loan to get cash. But in 2021, he did not do that. And he chose not to. So Elon, he may not keep exactly 25% of the voting shares or whatever. I don't know how close it is. But what this election is going to do, and we'll talk about this in a moment, is it's going to allow Elon to keep more shares long term. So if he wants to keep the the proxy companies out of controlling his robot army or whatnot, and he wants the votes for that. For him to control more votes long term, I would argue he would elect to do this 83B, and he has until December 6th to do that.
Yeah.
And he needs to come up with 15 billion in cash. So that's why we came out with the video on Monday, and we'll see what happens. We're sticking our necks out there. It's like the this is news people don't want to hear, so I understand it. Doesn't mean we're right. He could choose not to do it, but maybe we could dive in a little more. But you want to add some more first, Matt?
Well, yeah. Well, I was just going to say, so like, I think that's a really good setup, and I think it is clear. What I think is incontrovertible is that Elon, assuming Tesla hits the milestones, which there's absolutely some operational risk in there, but I think most of the people watching this are bullish Tesla long term, and think that there's a relatively decent chance that Elon can hit these tranches. I never know what do I Americanize it or do I go French? But assuming that Elon hits all these tranches, that implies Tesla stock has to be around $2,200 per share or higher, given the market cap milestones that are included in there. And so if that's true, the question basically boils down to the government would be owed tax, ordinary income tax, on that $2,000 share price if Elon doesn't make this election. So therefore, if you think that it's a reasonably high probability that Tesla does hit these milestones, and if you think Elon is bullish on wanting to maintain as much control as possible, and if he's bullish that Tesla is actually going to hit these milestones such that he'll get the full payout or something very close to the full payout, then it makes the most sense for him in the long term to to make this Section 83B election. So like that much I think is like incontrovertible. Like there's no I think arguing around that. Farzad here saying incontrovertible is an elite SAT word, Matt. Yes, that's true. And I think the best part about what we're doing right now in this stream is that it's Farzad's channel, but without Farzad. So I'm going to go ahead and take this Farzad quote off the screen, get back to my elitist ways, and kick you out. But so
don't give him the link, by the way.
What's that?
Don't give him the link.
We've got the keys to the channel now, and
right.
We're going to change the password. Yeah. So if we can all agree, and I think we all can agree that the best thing for Elon to do in the long term is to make this 83B election to maximize the amount of shares that he's going to have in the long term. Then the question turns to how is the tax that's due now going to be funded? So maybe we can kind of transition to that part of the discussion.
Yeah, this is pretty wild. So I might laugh or get a little uncomfortable. It's this part's wild.
Yeah. So just again, we're going back to the document. Let me pull that up here.
And ironically, the first part was on page 69 of the proxy.
Ooh, hang on. Why can't I find it? Here we go. Yeah, this part that we're on right now. Yeah, actually page 69. If we scroll down a little bit, you can see it right here. So hilarious. But so the same section we were reading from before, it has this issue in here. Mr. Musk may elect to satisfy tax withholding obligations relating to the 2025 CEO Performance Award by net share settlement. To the extent that Mr. Musk does not elect net settlement, Mr. Musk may satisfy such tax obligations by paying cash or selling a sufficient number of shares or otherwise deliverable under the 2025 CEO Performance Award. So I won't keep reading the rest of this, but essentially what this is saying is with this net settlement option, he can essentially have Tesla pay the cash that Elon is due. So in the scenario that we were coming up with yesterday, it'd be about $15 billion. He could have Tesla pay that $15 billion, and he would essentially net settle by having Tesla issue a corresponding fewer number of shares. So like this actually seems like it makes a decent amount of sense, just logistically. Like,
And they
okay,
also
Elon doesn't.
mentioned this like 10 pages down, right, Matt, about net settlement. Maybe you could zoom
Sure.
down to that.
So let me shoot down to that part. Yeah, it's right here. So if Mr. Musk elects to use the net settlement feature to satisfy his tax obligations arising in connection with the 2025 CEO Performance Award, he will receive fewer shares of common stock in connection with the award as a result. But Tesla will need to pay an equivalent cash amount over to governmental authorities. And here's the understatement of the century: such cash amounts may be substantial. um, So, in this net settlement feature, essentially what it's saying here is, Elon gets fewer shares, but he doesn't have to pay the cash. And so you might be thinking, okay, that's a good thing, because then Elon doesn't have to sell $15 billion of shares. And so, like, you don't have that downward price pressure. And so non-issue. In fact, here, net settlement makes this all a non-issue. Okay, you're right. In terms of the immediate, like the this week impact. But let's fast forward a little bit to a scenario. Let's assume Elon makes the 83B election.
And that settlement. So Matt, let me ask you, how does Tesla pay $15 billion in cash?
Well, let me show you how they pay it. So this may require Tesla to raise capital either through the sale of equity securities or the issuance or incurrence of debt, or Tesla could use cash on hand. The amounts would likely be exceptionally large. So, this goes to the longer term, payments. So like when these actually vest, the, hundreds of billions of dollars in taxes, like that could actually be handled through net settlement. But it could also be through the Section 83B award, which is germane to right now. If I can use another word that Farzad doesn't understand. But it says right here, if Mr. Musk files an election under Section 83B of the code with respect to the 2025 CEO Performance Award, the cash payments described in this paragraph would be due upon issuance of the shares in accordance with the award rather than upon vesting. So again, here it's explicitly saying that Elon can do net settlement under the Section 83B, and the cash would be due immediately. So in this case,
the cash would be due immediately. And so one place that Tesla could get this cash is the 40 billion in cash they have, right?
Mm-hmm.
But then, let's think about what the media is going to say about that. Not only did Musk receive the largest CEO award payment ever, but he's making them pay the taxes for him. They'll leave out that this gives him less shares over time. The media will. So like they'll make Musk a villain over this. We don't think this is likely they go this route because of this, but it is a possibility, and it is specifically outlined in the proxy.
Yeah. And so, I mean, just think about this. I mean, one of the kind of amazing things about being a Tesla shareholder in the last couple of years is just watching like the cash flow be so strong, and then watching the cash balance tick up from, like 10 billion to 20 to 30. Now we're at like $40 billion. It's like, okay, that's awesome. We're literally talking about Elon taking a third of that in order to pay for his tax bill on the $1 trillion pay package that he was awarded. So, like, not only will the not only will the media like make a field day out of this, I genuinely think a lot of Tesla shareholders would be upset if, let's say it's late January and the earnings deck comes out and we see cash balance drop to I don't know, let's say like 27 billion or something like that. Everyone's like, whoa, what happened? And then like you go and like read the filings, and it comes out that like, Elon is paying his personal taxes out of Tesla's cash hoard. And given how much CapEx Tesla needs in the coming, coming years, with the chip fab, with the Cybercab build out, potentially owning a decent sized fleet, there's going to be a fair amount of capital that they need. And so I think to essentially take a third of Tesla's cash balance and use it to pay Elon's personal tax bill, I think there would be some shareholders who would be very upset about this. probably a lot of institutional ones, and probably on X, I think we'd see a lot of people being like, oh, like Elon just like raided the corporate piggy bank to pay his taxes, and he's getting overpaid. Like there would be a lot of backlash, and I think some people might sell. We'd have the governance issues, conversation coming up again. So I don't think the optics of this would be good at all. And
Tesla could also sell some of their own stock. They could issue debt or borrow the money to do it. Those are possibilities. Maybe Nvidia does a $15 billion investment in Tesla because Tesla is such a big customer of Nvidia. I don't think that's likely, but in this timeline, it could happen. So let's just back up. So with net settlement, what's happening is Elon is electing for Tesla to pay the tax, and he's foregoing an equal amount of shares on a per dollar basis. And this can happen either now if he does the 83B and gets in that advantageous tax situation, or he can do it later when these vest or they're exercised or however those work at a later point. So this solves a big problem potentially where Tesla and Elon have more options on how to unwind this. It's pretty painful in 2021 when Elon sold his stock. The stock went from like around 1,100 a share in November down to, I think it was below 900 before rallied again to in early January 2022. So they have some options on how they handle that. And what this 83B allows is for Elon or Tesla to sell less stock or to use less cash in the future. So we think it's the long-term best option for Elon to choose. But maybe for some reason they don't choose to do it. That's a possibility. But it would essentially need to happen this week where that cash would need to be raised one way or another, whether from Elon selling or from Tesla coming up with the cash.
Yeah, or for Elon going in margin, because I think that is the one option which would have the most minimal impact to the share price. I don't think anyone would be upset if Elon pledged more of his shares as collateral, paid the $15 billion of cash on margin. I think that's the one area where this whole thesis could be right, but there's not a share price impact in the near term, assuming he pays it on margin.
Yeah.
So maybe we can kind of unpack that and how probable or not is it that he goes down that route.
Yeah. So when he sold in 2021, he didn't do margin. The stock goes around the same level, is a little lower, so it's maybe like the equivalent of 366 a share, and Elon sold $11 billion. So the share price was lower, and the amount of tax money he owed was lower. So then, the stock price went down by around like 20% when this happened. And this was before all the sales for Twitter. So it's not related to him raising cash for the Twitter purchase.
Yeah.
And also I'll say this, like, I think the reason why he chose not to add more margin in 2021 was because he's already all in on his companies, like mind, body, soul, sweat, blood, tears, all those good things. Like, I think that's why he's not adding margin. And there's also a risk if he doesn't earn the plan, and there's some analysis that shows like this plan is maybe all or nothing with how it may function. There's some research by James Catt. He had a video out. If he doesn't earn the plan and he pays $15 billion in tax now, but it's paid from margin, like think of where Tesla stock would be if Robotaxi wasn't successful, if Optimus wasn't successful, and Tesla's just making like 2 million cars a year. Like Tesla, like the stock wouldn't be worth that much. The reason why it's worth as much today isn't just the car company, it's the hope of the future with robotaxi and Optimus.
Yeah. So, yeah, I mean, if you had to kind of peg the probabilities, I mean, we've got a couple, like, I've got a probability tree kind of in my mind. Like, there's the probability that he actually makes an 83B election or not. And then, I think we agreed that it makes the most sense for him to make the 83B election. So I don't know. I'd probably peg that at like 80%. Maybe that's too high, but to me, that seems about right. Then within that option is like does he sell shares? Does he go on margin? Does he do net settlement? How do you, if you were to think of the kind of probabilities of each one of those scenarios, how would you kind of think through them?
Because of how Elon treated the 2012 CEO award, essentially waiting until the last minute to exercise, which made him best off long term. I think he's going to choose the option that makes him and Tesla shareholders best off. It is painful when he does have to sell shares to pay taxes. That hurts all shareholders. It takes shares from the hands of Elon, who is otherwise pretty diamond-handed. If he's not trying to save the world by buying Twitter or paying taxes, he's taking shares from Elon's hands and it's giving it to another person who isn't going to be as diamond-handed as Elon. They aren't going to hold the stock with as much conviction. So I think it's closer to like 90% chance that he does it. And I would say like maybe 90% that he does it with paying for it himself through sales of stock. Maybe those are slightly high, but that's where I'm at.
So then like maybe 5% for net settlement and 5% for margin. Is that kind of what you're thinking? Somewhere in that neighborhood?
I don't think he'll do net settlement this time around. I think it's for at the end of the plan where it's very messy. Another thing is that I'm not trying to complicate this, but we've all forgotten about the 2018 award. So the 2018 award could get reinstated if this whole thing gets thrown out with the Delaware case. And then he has all these options that he'll need to exercise by 2028. I think I don't know if it's like 300 million shares or I forget like how many shares it is. But at that point, he's going to have to pay a lot of taxes then and sell a lot of shares. More so than he would need to sell, this week if he does the 83B election. So like that's a big hairy thing that they're trying to give themselves more options of in the future.
Yeah. So I think the question then goes to, all right, when what might we know kind of what happens? Is the reason you had that one up? So, I think one thing with the 83B election, technically he doesn't need to disclose that publicly. That's an election that Elon makes to the IRS. He is obligated to tell Tesla whether he's making that election because they need to withhold the taxes on his behalf. So he does need to coordinate with them, but I don't believe that there's any public filing that would need to be made to kind of indicate that he's made an 83B election. So then the question becomes, okay, when would we find out? If he's selling shares to pay for this, then we'd find out by him filing a Form 4. We'd have a few days after he starts doing the selling. So I think the kind of indication of whether we're right on this assessment will be, in the next few days. Essentially, we would need to see some like big selling, and Tesla kind of being disjointed from the rest of the market, which we certainly have seen in the past when Elon sold in rather large chunks. So if we see something like that, then we'd be on the lookout for a Form 4 in the coming days. And so if that doesn't happen, so let's say we get to Monday and Tesla price action has been relatively muted, then we wouldn't assume that there would be a Form 4 coming. But then that leaves open the possibility that he's either used margin or the net settlement option. So if he's used margin, then we might never really find out unless he wants to post about it or something like that. But if he uses a net settlement, then we might not find out until late January, like I said, when they actually make a filing and we see the balance sheet and the kind of updates to the company's financials.
We might though find out about margin in the 10K. So sometimes they talk about the margin of the CEO in a 10K.
I haven't seen that before. You asked me to look at that. I couldn't find anything about that in the 10K for Tesla. So, I mean, honestly, the way Elon operates, if he is making this election, I would kind of imagine that he's going to post something about it on X at some point. So we really don't know. I mean, if he's selling shares, we will find out about it with the Form 4s. If he's choosing another option, I don't know. I kind of think he'd want to brag on the fact that he's paying $15 billion in taxes, and he's doing so in a way that's actually non-refundable. So if he, in other words, if he doesn't deliver, then he will have paid tax for nothing. Like, I think that's a message he'd be pretty proud of. And just like, it fits Elon's personality. That's why I think he's likely to kind of go down this route. He's like saying, I'm putting a stake in the ground. I'm paying the government $15 billion. That's how confident I am that I'm going to achieve these milestones. Tesla shareholders, like, I've got your back. I think that's actually a pretty compelling message if he can kind of craft it right. But he may have, hurt the stock price a little bit in the short term, before he would actually announce something like that.
Yeah. So, some people are saying, this is a negative thing. Overall, we think it's a positive for Tesla shareholders. It's also a positive that this whole net settlement is possible for when Elon does have to pay the tax in the future by 2035. So those options are there, so they can manage what happens with the stock and that selling that happens toward the end of the plan. So that can happen in a more orderly fashion. We don't think anything's suddenly wrong with Tesla's fundamental business, but we do think this is a potential negative that really very few people have been talking about. And I think it's been mentioned in some comments here or there, but really it was not discussed at all. And this is why we're sharing it with you all, even though it's kind of negative and weird and all this stuff. It's real. It's in the proxy. We showed you. We didn't make it up.
Yeah, I did see one of the comments a little earlier was like, what's your motivation for sharing this misinformation? I'm like, this is kind of like what happens anytime, Tesla bulls share anything that's like slightly negative. It's like people start questioning motives and everything like that. This isn't misinformation. This is stuff from Tesla's actual filings. We've done a lot of research on this, sharing our thoughts publicly. So
we don't want people to be surprised by this. So this is why we're talking about it potentially before it happens. So let's get into some questions.
Okay.
So GHF, FHG or whatever says,
say the whole handle.
Elon doesn't have to pay the tax in that window. So there is specific language in there that the tax must be withheld when the election occurs. So like when you withhold tax from an IRA distribution or when you withhold tax from a paycheck. So I think this is the most relevant analogy. When you withhold tax from a paycheck, it needs to be withheld immediately. And you can get into criminal problems if you're not adequately withholding tax from paychecks as a company.
Yeah, I mean, this was something that you and I were kind of going down the rabbit hole of earlier. At first, I was thinking, okay, this would be 2025 ordinary income, so it might not be due until April 15th. So, maybe he could sell shares, much later into 2026. The more we dug into that, the more we found that was actually not the case. And actually, again, going back to the same section that we read earlier, if he makes the 83B election, the cash payments described in the paragraph would be due upon the issuance of shares in accordance with the award rather than upon vesting. Now, the shares have actually already been issued. So, this is where that 30-day clock comes into play. If he makes that 83B election, he essentially immediately has to give Tesla that cash or elect for the net settlement option. So, yeah, that's where that comes down.
So, here's another one. This could happen. Elon, he may comment whether he decides to do it or not. He could also tell us we're wrong. Open to that too.
Yeah. Well,
it's in the documents though, so it's there.
What wouldn't happen is he wouldn't say, yes, I'm planning to sell shares on Thursday and Friday this week. So,
yeah.
So he may answer to the negative. Otherwise, he would simply not respond.
Yeah. So it's $15 billion dollars. How many shares is that roughly, Matt?
I
think it's 35
million shares.
Okay. 35 million shares. It trades, P. Dilley said 96 million share average daily volume as per Thinkershare. So Elon could choose to get this done in one day. I think it's going to be, if he does it, I think the latest he starts is Thursday. He could do, Wednesday, Thursday, Friday. We'll see. Yeah, I'm interested to see what happens. But there's no one sitting there with $15 billion in some kind of dark pool. We hear this every time, Matt. Yep. Oh, if Elon would just use dark pools, it wouldn't move the stock. Well, there's no one with 15 billion that's like willing to pay Elon a fair price on the stock. They'll buy it from him at a discount, like 10 or 20% discount, but they're not going to pay a fair price to Elon.
Yeah. So I did see another comment that I wanted to bring up. The $15 billion math can get a little confusing. So, here somebody was basically saying, you'd have the a $48 billion obligation. It's actually Elon would actually pay the $334 to Tesla. So that's essentially his cost basis. So he doesn't get these shares for free. Even when they do vest, he owes Tesla $334 per share upon that time. So when that happens, he's actually going to get fewer shares because he's not going to have 424 million shares times $334 a share kind of lying around. So because that's like an amount that he has to pay Tesla upon vesting, his cost basis and the amount of the ordinary income would actually be just the 434 minus the 334 cost base. Yep. So that's why it's the 15 billion rather than the 48 that's calculated here. So that's one other kind of wrinkle that I think a lot of people actually aren't aware of, that Elon actually has to pay to receive these shares. And it's going to be a rather substantial amount of money that he has to pay Tesla just to get the award. And then also the tax that is going to be due to the government either upon 83B election and upon vesting.
And that's when the shares vest. So the 334 per share is not due when they on issuance, is due when they vest.
Yeah. Yep. So now, like this comment, I also wanted to highlight because, like, I agree. Like a lot of people, like we've been getting a lot of negative feedback. I think anytime we say like, "Hey, there could be like a potential problem here," it's not to like cause any like panic or anything. In fact, we actually, as we said multiple times, we think this is super bullish in the long term. But like the image that keeps coming back to my mind is when Elon talks about optimizing for the goal maximum, not the local maximum. So, like we saw this with not having LiDAR on FSD. He's like, if you can get vision to work extremely well in the long term, that's the best option. And then LiDAR would become redundant. So why don't we just ignore the local maximum, where meaning you could get better results in the short term if you got LiDAR, but we'll eat the worst results in the short term in order to accelerate our progress toward the goal maximum. And I think it's a decent analogy for this situation where, okay, if he has to sell 15 billion of shares or take it from Tesla with the cash, with the net settlement feature, whatever, I think the optics of that would be bad on a on a local scale. But I think what it actually indicates, again, as we've said multiple times, is like a very strong bullishness on him. One, believing in the very bright future of the company, and two, wanting to get there with as many shares as possible. So I think the message actually couldn't be more bullish, but it probably would not be perceived that way.
Yep. I don't think it would be received that way. Yeah.
This took us a long time to like sort through and dig out and like try to understand the implications of it. And
when we first heard about net settlement, like literally I almost had a laughing fit. Like sometimes you laugh and you can't breathe. I almost had one of those. Like it was close.
Yeah, well, it's like a big WTF moment. Like, and actually, I'll share this the one more time, because it's like this is just like such a funny line that they put in here. So, however, due to the unprecedented size of the 2025 CEO Performance Award, any related tax sales could represent one of the largest individual transactions of its kind in U.S. history. And then it just goes on to say that the impact from such sales could result in impacts on Tesla's price of common stock, including short-term volatility, which is a very understated way of saying, like, this could be pretty drastic in terms of the share price. I think especially when the shares vest and you're talking about at that point hundreds of billions of dollars of tax obligation. But even with this $15 billion item in the short term, it's like, yeah, this is like, it's like I almost couldn't do anything but laugh when I read that, like they're actually talking about his tax sales being among the largest in U.S. history, and like that would have a very negative impact on the short-term price. So we can be bullish on the long term and also want to understand, potential risks in the short term. So again, none of this is financial advice. We really just want to be sharing our research to kind of help with crowdsourcing the information. It's possible we get some stuff wrong, and so like the more we expose it to additional eyes, it helps us to sharpen our own thesis as well. But also we're getting pretty close to crunch time with him maybe making a sale, and so I think the worst thing that could happen is if like nobody knows that this is coming, and then there's some like Electrek article about how Elon sold 15 billion shares because he hates the company and doesn't believe in its future or something. It's like, wait, no.
Yeah, that would be the headline from Fred for sure. Yeah,
for sure. And Laura Kolodny on CNBC, like it's so easy to see a scenario where what is actually something that's bullish in the long term just gets pitched in a way that's very fear-mongering, and we actually don't want people to lose their shares to fear, especially when it's something that is short-term and transactional and actually very bullish in the long term. We just want people to be aware of that potential negative catalyst.
And we do go into some more details in the video that we put out yesterday. Matt pulls out his spreadsheet and talks about how he shows the tax savings for Elon, how he saves 15 million shares, and if the share price is $2,200, that's something like what, $37 billion in taxes, or I don't know. So like it's a lot of money. Even for Elon, it'd be meaningful. He could use it to start up another company if he wanted to. So yeah.
So one other comment here, $15 billion, not 15 billion shares is the short-term impact. And one other thing that I wanted to highlight, actually, I don't think that we even said this in our video yesterday, but the share price that would be used to determine how much tax is owed would be the share price when the Form 83B is filed with the IRS. So now we're getting into a bit of speculation here, but I think it makes sense. if he knows that he's got a roughly $15 billion tax hit, let's say, it actually would make sense to minimize the impact of the tax hit, to have the share price be lower when he makes that election. So,
Right.
if he knows he's going to make the election and he thinks it can have a material impact on the stock price, say drive it down by 10 or 15%, something like that. Then if he's selling, say into Friday, stock drops. I'm not going to speculate on what it might drop to, but let's say the stock drops. Then the fair market value would be at a lower level than where it is today, which would mean that the $15 billion figure we shared, maybe it's only 12 billion or 10 billion or something like that, because the difference between the 334 and whatever this new lower number is compared to the 425, whatever it closed at today, that would actually lower the tax bill. And then that would also set his basis at a rate where he'd be taxed on the increase in value on a long-term capital gains basis. So he'd be ultimately saving those taxes if Tesla was at a lower price.
Mm-hmm. What's a few billion between friends, Matt?
For you and me, it'd be a lot, but for Elon, I think even for Elon, it's a lot. I mean, yeah. So, and anything else you wanted to hit on the taxes, or should we talk about maybe a good contraindicator, which is Michael Burry commenting on Tesla's valuation again?
Yeah, let's get into Michael Burry and some other things.
Yeah, so I mean, I don't know if there's actually too much to talk about here, but it is just hilarious. Like a month ago, he was talking about closing his fund. I think he's actually doing it. I haven't been following it too closely, but he's basically been wrong on everything since 2008. I mean, he had one phenomenal call. They made a movie out of it, and he's done really well. But I think similar to Chanos and a lot of the other people who've done really well, Michael Eisenberg is another one who've done really well, shorting some companies at one point in time. They've missed out on a 15-year bull run, and have just torched a lot of capital along the way. Talking about Tesla being a cult. Michael buried himself. Yeah, with only one eye, he, in fairness, can't see the truth too clearly. But
Dang.
was that too much? Yeah, it
Yes,
wasn't even that
yeah.
funny. It wasn't worth it.
You're only allowed to insult Farzad.
Okay, well, that's easier. but it's just funny to me that you can be wrong on a thesis for 5 to 10 years straight, I've lost a lot of money for your investors, and still just be like, oh, Tesla's a cult. It's so obviously overvalued. I feel like at some point, you just have to shut up, because with the short, your maximum gain, unless you're using derivatives, is 100%. What is Tesla up 10x since he first put on his short, something like that? So it's the outperformance has torched any possible gains that he could have had.
So I think this guy is trolling, but I do want to go backwards a second here.
Right.
So Tricky Bam says by 2033, Elon pays a tax bill in cash and keeps every Tesla share. Why sell a single share today when he won't need to? So let's say he achieves a plan. I think the tax bill is $300 billion. So where does Elon have that cash?
Yeah,
maybe Tesla starts paying this huge dividend, but he won't. There won't be the cash to suddenly pay the bill without selling some Tesla shares. It's just not.
You get taxed on dividends too, by the way. So it's
Oh.
you get taxed on that income. You have to pay the tax as these shares vest. So what I think is definitely unlikely is I don't think Elon's going to go into 300 billion of margin debt at some point in the future to avoid selling a single share. I think if we get to the point where Tesla's doing what's the highest tranche, 400 billion in adjusted EBITDA or something like that.
Yeah.
Presumably, if they get to that type of level, they will be issuing a dividend. So maybe he can pay some of his taxes out of that. However, keep in mind that the taxes due as these vest, even in that scenario. So Elon even owning 25% of the company. I mean, let's just say hypothetically, they've got 400 billion in EBITDA. Tesla has to pay taxes on that. So let's say that gets knocked down to 300 billion.
So EBITDA means earnings before interest, taxes, depreciation, and amortization. So it's your earnings before tax. Tesla doesn't. They do have a good amount of depreciation, but they don't really have interest. They don't have a ton of debt, unlike other automakers. They would owe taxes on that.
Yeah. Yeah. So, the point is, it's like maybe after tax, there's, I don't know, 250, 300 million of net income in that type of scenario, which, like, awesome. I think we're all going to be very happy as Tesla shareholders if they get to that type of level. But if Elon owns 25% of that, like, maybe he could get like 100 billion in a dividend, but then he's going to have to pay tax on that dividend, which leaves him even less to pay the taxes on the shares that had vested. So it's just like, yeah, where is the cash going to come from? I think is like a key thing, whether you're looking at this near term 83B election or in the longer term cap gains. Like this is, as Tesla said in the proxy statement, this is like unprecedented tax bill, and it's almost impossible to predict what's going to happen as a result of trying to have the funds to pay for that.
Speaking of unprecedented, Trump said he's going to get rid of income taxes, and tariffs would just pay for everything. So maybe Elon won't own any tax and owe any tax in 10 years, and there'll be no corporate taxes. We know that's a joke.
Yeah.
All right, so let's go back to Burry, and I'm going to bring Chanos in the conversation too. Chanos has this incredible track record of exposing actual frauds. I think WorldCom he might have exposed. He definitely exposed Enron.
Yeah,
and he exposed a number of companies before WorldCom. So he actually exposed a number of frauds. But at his core, Jim Chanos and Michael Burry included, they're value investors, and they're trying to short a company like Tesla, or buying puts on a company like Tesla. Tesla is a growth company. It's not a value company. It's not like Coca-Cola, where it just grows with the economy and acquisitions of beverage and food companies. And just grows real slow, and value investors love to own those. Like Tesla is a growth company, and I think value investors make a huge mistake when they try to short or bet against growth companies. And Tesla is not a fraud. Like, they were never a fraud with warranties. Like, Larry did a great job pointing that out. They were never a fraud with other things like the factories, and there's all these wild things that the shorts would say about Tesla in the past, like that they were smuggling stuff from the factories to Mexico and all these crazy things. Like,
there was one post that like legitimately claimed Tesla was smuggling drugs from Mexico. It's like, oh my gosh. I made an April Fool's video about their drug smuggling business because I couldn't believe the hypocrisy of both saying Tesla was like massively unprofitable and that they were smuggling drugs. Like, that's a very profitable business, so you might as well bake it into the valuation, which is what I did a few years ago.
Yeah, so sorry, Farzad, if we got this demonetized, all that discussion. But yeah, the shorts, like, so the point Burry made in his short discussion around Tesla is like, Tesla is pumping for like some higher valuation, but like, if the autonomous future never comes for Tesla, or the humanoid robot Optimus future never comes, like, Tesla pumping really doesn't do anything. And they're not pumping to raise cash from their stock. Like, they have no motivation to pump the stock.
Yeah.
Because they're not using it as a currency.
Yeah, I think in 2019 that thesis at least had a little bit of some legitimacy, because like the company was actually raising capital at that point, and having a higher stock price did actually help them to kind of avoid bankruptcy risk, which was on the table back then. I thought it
There's
was
this whole
unlikely.
like, CRCL, like can't raise capital and can't leave, or I don't know what the L was.
I don't remember that one.
Here's what
Um,
Farzad said about getting demonetized for this
Sorry,
video.
I actually did not. I never even think about monetizing. So sorry, sorry, Farzad. Uh, Anyways, I don't think this was a particularly valuable stream in terms of your monetization. Anyways, um,
Yeah, in 2019, Tesla had a convertible debt. So they had some debt that converts to equity at a certain price, and I think Tesla, like if it didn't have that strike price, then Tesla had to pay off the debt in full, and so they said they couldn't raise capital, um, and literally like a couple days later, in the course of a day, Tesla, or I think this was like a number of weeks or months. So they were saying can't raise, and like in March of 2019, like a few weeks later, Tesla issued debt to pay off this convertible note. It was oversubscribed. They did it in a day. It was totally fine.
yeah.
um, so
So
that was behind us.
y- we've spoken a lot about some potentially painful things in the near term, but I want to try to end on a high note if we can. I got FSD version 14.2.1, and I'll say I've been very impressed. Um, this is the ability. We had a pretty big snowstorm that came through. I don't know if you saw like Dirty Tesla's video, but he had it on like an actual unplowed dirt road, just like you could, all you could see is like the indents where the curb was, and like the
Mhm.
fact that you needed to be in the middle. And FSD was driving like very great there. He had it on Mad Max mode. Um, and like winter drivers in the past, I think
Mhm.
might be permanently traumatized from FSD, just assuming that there's no snow on the ground and just like banking around the corners and spinning out. Like it was legitimately horrible and very dangerous. And I was actually like kind of surprised they released it in the state that they did several years ago.
Yeah.
So yeah, Chris from Dirty Tesla had it on Mad Max mode on these snowy conditions, and it was driving, very cautiously, but yet assertively, like exactly as a human would. I've been very impressed also. So
And
I've got a bit of snow where I am, and
it followed the tire tracks, but I think there was even a guy in Ohio. His handle is Tesla Iowa guy, and he did it on roads that were fresh, didn't even have tire tracks on it, and somehow the Tesla knew where to drive on the road. Very impressive. So like version 11, it would not slow down at all for snow. Like you needed a turn, it would not slow down before the turn. It would just turn like it was like a normal day. That it was like really bad. Version 12, it started to account for it, but still like it would slip and slide all over. I think even version 13, like the moment it would get a little bit of slide, it would freak out and do the red hands, and it would quit driving. Um, and it made some adjustments for the snow. So it's like it seems like every year with us in the Midwest, it's like wait till next year. It's like the Chicago Cubs, like wait till next year. Hopefully they address snow and ice. We'll see how it does with ice at night. I'm seeing a ton of videos with that. That's pretty dangerous. But with snow, Tesla has solved it. They've
yeah,
solved it.
I don't think that's hyperbole. I was very impressed. Now, like it did
Mhm.
actually run over a curb in Chris's, example.
Mhm.
Didn't cause any damage. It wasn't like, atrocious, but still, it's like not
Not
exactly
ideal.
right yet.
Okay.
But the thing I like to keep in mind is that this is as bad as it's ever going to be, and it's definitely usable in its current state. And I think it can be very stressful. It takes a lot of attention to actually um, pay attention to like snowing conditions and like how far back you need to break. So this is actually a big deal that I think we can actually trust it in this iteration. So hats off to the Tesla team, and I've been very enthused by how quick the pace of these new upgrades have come on the 14 stack. We got 14.1.2 pretty quickly, then 14.2 came pretty quickly after that, and it was less than a week after I got 14.2 that I got 14.2.1, and every time it's been a noticeable improvement. So still some things that aren't perfect. Some things definitely need to be kind of ironed out for kind of smoothness. Like one thing I've noticed is if you're backing out and it's like a somewhat tight area in like a street that you're backing out into, it'll do this like Austin Powers turn where it'll like do a little bit of the way, and then it'll go forward a little bit, and then it'll back up, then it'll go forward a little bit, and then it'll back up a little bit. So I've had some of these like 5 or 7 point turns.
It doesn't, when it's doing the multi-point turn, it doesn't back up as much as it needs to. It like does like half as much as it should.
Yeah.
And then it doesn't have enough room to turn the corner.
Yeah, it needs to be more assertive in like starting the turns earlier, and when it's doing a 3-point turn, like turn a little bit more aggressively, like get a little closer to the object than it might feel comfortable doing.
Turn more, go further, use all the available room. But I mean, on a U-turn, it swings out before it does the U-turn, so it'll go like this and then do the U-turn. That's new behavior, and for me, I had a car in the right lane, so instead of like swinging out before the U-turn, it did a U-turn and just got closer to the curb. It didn't hit the curb, but it didn't swing out because I had a car in my blind spot. So like it's conditional. It's seeing everything.
Yeah. And like honestly, at this point, it does feel a little bit like we're nitpicking. Like there's been no safety incidents. A lot of this is just kind of comfort and like, oh, that's kind of a dumb way to do this thing. I don't think any of this is the sort of thing that is like a barrier to wider rollout or anything like that.
All right. So we covered a lot of ground. We enjoyed the comments too, and appreciate everyone's attention, understanding. We're just sharing what we know. Don't want people to be surprised by it. The media will definitely. I mean, I don't give guarantees, but they will 100%. If he does this election, they will, however they pay for it, they will 100% spend this as a negative. And we think if he does this election, it's actually more bullish because it says to us that he believes in the future value, that he will hit as many of those milestones as possible and get a ton of value from his 2025 CEO Performance Award.
Yeah. So very, very bullish, but I think the opportunity for this to be misrepresented and to be spun negatively is like extremely high. And so that's a big part of the reason we want to increase awareness.
All right. So you could check out our video on the Rebellionaire channel that we did Monday at 4. Also, James Stevenson, he did alert me to this issue. So, greatly thank James Stevenson for this. CERN Basher has been he's pretty nerdy on this as well. Understood it pretty well as soon as we posted about it, so he seemed to be aware of it.
But his pushback, if I can speak for him, was like he just thinks that Elon wants to own as many shares as possible, and so he thinks it's more likely that he'll make the election, but pay with margin, which is a reasonable stance. We disagree. But we were looking for kind of holes that like our thesis was wrong or we misunderstood the rules in some way, and haven't seen any of that. So I cannot.
And that's another reason we share it publicly is like we want to know if we're wrong or what what people have to say about it. So he's Matt Smith. I'm Bradford Ferguson. We're with Rebellionaire, appearing on both our channel, Farzad. Sorry we got you demonetized Farzad talking about the alleged practices of Giga Nevada back in 2018 with some Mexican mules or something. But with that, I'm going to say bye for now.
Bye for now.